We are covering the 7 top actively traded stocks that are bullish today. While watching price actions, let us inform you our review on MARA. MARA Holdings Incorporated, formerly known as Marathon Digital Holdings, has established itself as a major player in digital asset computing, focusing on large-scale Bitcoin mining operations across multiple regions. With approximately 265,000 miners in operation, MARA is not just another crypto mining company. It's at the forefront of innovation. The firm is developing advanced technologies like 2PIC immersion cooling, which enhances efficiency, and blockchain solutions like Enduro, a multi-sidechain platform built on Bitcoin, and ALYS, which brings Ethereum's smart contract functionality to Bitcoin. These innovations help MARA optimize its mining process and stay competitive in an increasingly challenging market. Now, the broader crypto industry is eyeing a major expansion in India, with companies like Coinbase, Binance, Bybit, and KuCoin all registering with the country's Financial Intelligence Unit. This move signals optimism that India's regulatory stance on digital assets could be softening, which could spark a surge in crypto trading activity in one of the world's largest markets. While MARA isn't directly involved in exchange operations, any increase in Bitcoin adoption or demand could have indirect benefits for miners like MARA, as higher Bitcoin prices typically drive mining profitability. For MARA investors, the key takeaway here is the potential impact of global regulatory shifts. If India does open up to crypto in a meaningful way, it could drive Bitcoin prices higher, making mining operations more lucrative. However, the crypto market remains highly volatile, and regulatory uncertainty continues to be a major wildcard. That's why MARA's focus on technology-driven efficiency and energy optimization could be a long-term advantage, helping it weather market fluctuations better than some of its competitors. The real question is whether this renewed push into India is a true turning point for the industry or just another cycle of speculation. If crypto adoption accelerates and Bitcoin demand rises, MARA could be well-positioned to capitalize. But as always with crypto, it's a high-risk, high-reward game, and investors should keep a close eye on both regulatory developments and Bitcoin's price movements in the coming months. Our review on HOOD. Robinhood Markets Inc. has always positioned itself as a financial services platform for the everyday investor, breaking down traditional barriers to trading and investing. From commission-free stock and options trading to crypto services and even a new credit card offering, Robinhood is constantly evolving to keep its platform sticky and engaging. And right now, it seems like the market is paying attention. Shares of Robinhood jumped nearly 9% as broader market optimism took hold. The big driver? Reports that the Trump administration is taking a more targeted approach to upcoming tariffs, easing fears of widespread economic disruption. That news alone helped push major indices higher, and Robinhood, as a retail-heavy trading platform, benefited from the improved sentiment. When markets are bullish, trading activity tends to pick up, and that's good news for Robinhood's revenue. But it's not just macroeconomic factors at play here. The company is also gearing up for a big event, its Lost City of Gold keynote, set for March 26th. CEO Vlad Tenev will unveil new features for Robinhood Gold. The firm's premium membership and expectations are running high. Investors are eyeing potential new products that could drive engagement, increase revenue, and help Robinhood deepen its relationship with its most active users. And, of course, a little marketing magic is in play. The company is even running a sweepstakes with solid gold bar prizes to generate buzz. On top of that, the recent rally in the crypto space has added another tailwind. Bitcoin has been flirting with the $90,000 mark, and regulatory wins, like the dropped lawsuit against Ripple, have boosted sentiment across the sector. Robinhood's exposure to crypto trading means that as long as digital assets stay hot, it stands to gain from increased activity on its platform. For investors, the takeaway is that Robinhood is in a sweet spot right now. A combination of external market tailwinds, crypto momentum, and an upcoming product announcement is driving enthusiasm. But let's not forget that this is a stock known for its volatility. Big swings are part of the deal. Still, if the market remains strong and Robinhood's new offerings impress, this rally could have some legs. The next big test? Seeing what's inside the lost city of gold and how the market reacts to it. Our review on BBAI. BigBear.ai Holdings Incorporated is in the business of turning raw data into smart decisions, using AI to help national security, supply chain management, and digital identity sectors make sense of complex information. With customers ranging from defense agencies to logistics firms, BigBear.ai operates in a high-stakes space where accuracy and efficiency are everything. But right now, the stock is in the spotlight for a different reason. Wall Street analysts are weighing in, and the sentiment is a bit mixed. The latest brokerage ratings put BigBear.ai at a consensus by rating, with an average recommendation score of 2.00 on a 1 to 5 scale, 1 being strong buy, 5 being strong sell. Half of the analysts covering the stock have given it a strong buy, which sounds promising on the surface. But here's the thing. Analyst ratings don't always tell the whole story. These firms often have built-in biases, and historically, strong sell ratings are rare compared to the flood of buy recommendations. That means investors need to dig deeper before jumping in. What's more telling is the recent shift in earnings expectations. The Zacks consensus estimate for BigBear.ai's full-year earnings has dropped 12.3% over the past month, signaling a more cautious outlook. That's something investors should pay attention to, as earnings estimate revisions often have a stronger correlation with stock price movements than broad analyst ratings. So, what's the real takeaway here? BigBear.ai is operating in a growing and critical industry, but the near-term sentiment seems a little shaky. While Wall Street is flashing a buy signal, the downward earnings revisions suggest some analysts are rethinking the company's immediate profitability. Investors looking at BBAI should weigh the long-term potential of AI-driven decision intelligence against the shorter-term headwinds reflected in its earnings outlook. If you're bullish on AI's future, this could be an interesting one to watch, but keeping an eye on financials and upcoming developments will be key. Our review on RGTI. Rigetti Computing Incorporated is in the high-tech game of quantum computing, offering cloud-based quantum computing services through its Rigetti Quantum Cloud Services platform. The company is known for its cutting-edge quantum classical infrastructure, which lets companies access quantum computing power from public, private, or hybrid clouds. Rigetti is also deep into designing its own quantum chips, with its homegrown QPUs featuring superconducting qubits. It's a fascinating space to be in, and investors are definitely paying attention. Recently, the quantum computing sector has been making waves, with big players like NVIDIA, Microsoft, Amazon, and Google pushing the boundaries of what quantum can do. But not all the excitement is translating into stable stock performance just yet. Quantum computing stocks have been on a roller coaster ride, and Rigetti Computing is no exception. The volatility is largely because the tech still has a long way to go before it's truly practical on a broad scale, with analysts like NVIDIA CEO Jensen Huang estimating that we're 15 to 30 years away from truly useful quantum computers. Meanwhile, other companies like D-Wave are claiming major milestones, like achieving quantum supremacy, and Microsoft is touting its new Majorana 1 processor. Still, quantum computing is in the early stages, far from being the revolutionary tech it's hyped up to be. For Rigetti, that means there's a ton of potential, but the road to commercial viability might be longer and bumpier than investors initially hoped. In short, Rigetti's stock performance is heavily tied to the hype around quantum computing and whether or not it will meet its potential anytime soon. While it's great to see the innovation and development, investors need to stay patient and keep an eye on how these advancements are translating into actual products and, more importantly, revenue. For now, Rigetti seems like a high-risk, high-reward play in a technology that could change everything, just not tomorrow. Our review on AAL. American Airlines Group Inc. has seen its fair share of ups and downs recently, but it's been riding the coattails of some broader market movements. The airline sector, in particular, got a nice boost after news broke that the Trump administration is scaling back on its tariff threats. This news has helped lift stocks across the board, and American Airlines, as one of the giants in the industry, certainly benefited from this shift in sentiment. Now, American Airlines operates a massive network with hubs in cities like Dallas, Fort Worth, Chicago, Miami, and New York, among others. It connects passengers across the globe, from the U.S. to places like London, Sydney, and Tokyo. The airline's fleet is pretty vast, with around 977 mainline aircraft in operation, and it also has a regional network through subsidiaries like PSA Airlines and Piedmont Airlines. What's really interesting about American Airlines is how much the broader economy and global trade can impact its stock. News like the Trump administration easing up on tariffs is big for the airline sector, as it alleviates some of the uncertainty and economic pressure that airlines often face, especially when it comes to international trade and cargo shipments. While the airline industry still has its challenges, rising fuel costs, labor issues, and competition, the easing of trade tensions could give American Airlines a little breathing room, potentially boosting its profitability in the short term. So, while it's hard to predict how the airline sector will perform in the long run, especially with all the external factors at play, for now, American Airlines has some positive momentum. Investors seem to be liking the reduced tariff threat and the broader market optimism that comes with it. However, as always with airlines, things can change quickly, so it's a space worth watching closely. Our review on AMZN. Amazon.com Inc. has been seeing some solid upward movement lately, with its stock trading higher on Monday. So what's driving this boost? A big factor seems to be news that the upcoming tariffs might be fewer than initially expected. The Trump administration is reportedly considering excluding certain sectors from the planned tariffs that are set to go into effect on April 2nd. This potential reduction in tariffs could be a major win for Amazon, especially when you consider how much its global supply chain is impacted by trade policies. If the tariffs are more targeted, Amazon could face significantly less disruption in its operations. The company has a vast network of products and services that rely on international trade, so any reduction in broad tariffs could mean smoother logistics, fewer supply chain delays, and lower costs. Plus, with the possibility of sectors like semiconductors being excluded from the tariffs, this could help keep costs down for Amazon's consumer electronics and tech products, which make up a large portion of its sales. If components become cheaper, it could boost profit margins, helping Amazon's bottom line in a big way. On top of that, analysts are still pretty optimistic about Amazon's future. Bernstein has maintained a buy rating on the stock with a price target of $275, and the broader analyst consensus is also a strong buy. With a 32% upside from the stock's current price, many see a lot of potential for growth here. Overall, it seems like Amazon is getting a nice push from both the tariff news and the analyst optimism. The potential reduction in tariffs could reduce costs and improve profit margins, while the analyst sentiment shows that there's still plenty of confidence in the company's long-term growth. Of course, there's still uncertainty around how the tariff situation will unfold. But for now, it looks like Amazon is in a pretty strong position. If things keep moving in this direction, we could see further gains for the stock. Definitely something to keep on your radar if you're looking for growth potential in the tech space. Our review on WLF. TeraWulf Incorporated has been making some interesting moves lately, especially with the recent buzz surrounding the return of crypto companies to India. As a company that's all about environmentally sustainable data centers for Bitcoin mining, TeraWulf is in a unique position to capitalize on the global push toward more eco-friendly crypto operations. If you're not familiar, TeraWulf owns and operates the Lake Mariner facility in western New York, which is powered largely by zero-carbon energy sources like nuclear and hydroelectric power. This focus on sustainability gives TeraWulf a strong competitive edge as the crypto market continues to evolve, especially in the face of mounting environmental concerns about Bitcoin mining. Now, the reason this news about India matters for TeraWulf is that it could signal a broader positive shift in the global crypto market. We've seen reports recently that several major crypto players, like Coinbase, Binance, and Bybit, are re-entering the Indian market as they anticipate easing regulations around digital asset trading. If the Indian government starts to loosen its grip on crypto, it could open up a massive new market for mining companies like TeraWulf. India has long been one of the world's largest and fastest-growing digital economies, so tapping into that market could be a huge opportunity. For TeraWulf, this potential shift in India could also signal a broader acceptance of crypto and its infrastructure, helping to further legitimize the industry. The company's focus on energy-efficient mining and AI applications positions it well to take advantage of such regulatory changes. Plus, as more countries explore cleaner, more sustainable ways to mine crypto, TeraWulf's use of low-carbon energy could become even more appealing. With crypto giants making their way back to India and the regulatory environment potentially becoming more favorable, TeraWulf's unique position in the market could lead to significant growth. It's definitely a space worth watching for any investors looking to get involved in the cryptocurrency sector with a focus on sustainability. Please subscribe, give the video a like, and watch more from our playlist. Thanks.